traders, Raghee here, and to kick off this update as we wrap up the week, I want to focus on the sectors that continue to outperform and why we want to be a little bit more specific about sectors and individual stocks while the broader indices are still in a lot of chop. Now, you might have noticed that we had a heck of a close. The markets rallied in a big way to wrap up the week. And that's terrific. You know, I mean, again, I'm not bearish the equities. What I am is bullish certain pieces of these broader averages, not the broader averages themselves. Now, we don't want to bet against these broader averages in any way. We don't want to say that these broader averages are not capable of regaining their uptrends from last year, but they're not going to be the same kind of markets, gang. They're not going to be the same kind of uptrends. We're probably not going to see the type of parabolic moves that we saw widely, and that's okay. That's totally okay. We just have to adapt. So how do we adapt? That's what I want to show you here. First of all, we adapt by not playing the laggard markets, especially ones without a lot of clarity. Now, the NAS, I did give you guys a setup for the NAS just the other day, and it bounced off that zone, and that's great. That's fine. But the one that I like better is the other setup that we talked about on the Dow, where the Dow is your relative outperformer. And we've talked a lot about IYT and XLI, and let's talk about a couple other sectors here. A couple that are correlated and a couple that are not. Okay, so what does correlated mean? Well, let's start off with the XLF. XLF is more correlated to the indices, Dow and S&P. And this has been a very strong part of the market. It's stronger than most of the indices. When I take a look at the S&P, the NASDAQ, the Russell, the only index that looks as good as the XLF, if not better, is the Dow. So this is a sector that looks better than most of the indices. So I'm getting a little bit more specific about where the strength is at. And the markets, when the indices go into chop, tend to do the same thing. So you're going to be trading with the flow in a much better way when you're focused on the individual sectors. And this particular sector, the XLF, is going to key off quite well. Historically, it does the 10-year. Okay, so as long as this 10 years moving higher, the XLF doesn't need it to, but it's sure not going to get hurt by a higher yield in bonds. Okay, so then let's talk about an uncorrelated sector. ITB. We've been playing names like KBH and Toll for some time because they're not beautiful individual trends, but they're in an overall market between the ITB and the XHB that look really good. Now, what I'm trying to remind everybody is I think we tend to get a little too fixated on tech. We tend to get a little too fixated on the S&P. We tend to get a little too fixated on small cap and the Russell. And right now, that's not where we want to put our attention. What you trade is more important than how you trade it. And the reason that we've been focused on what seems to be sort of outliers and oddballs, and that's really been the last 4 weeks, is because that's what the market's telling us to focus on. Focus on the macro, focus on the less correlated names, the broader averages, and you'll find some really good trends. And so that's where, you know, we talk about what we're not looking at, thinking outside of the box. And what we've been able to do the last 30 days, which is once we adapted to, all right, it's time to segue away from semiconductors and tech, communications to a certain degree, get away from, well, communications were pretty good, but get away from discretionary. Once we decided to veer away from those places that everybody tends to want to go and said, let's take a look at what's happening macroeconomically. What's going on in energies? What's going on with metals? What's going on with housing? And we started focusing on those parts of the market. You know, we can put on 19 trades, and I believe we went 16 for 19 in the last 4 weeks, focusing on those kinds of names. Now, you might say, okay, Rog, where does this land us in the equity, in the futures world? It's going to land us in the same place we've been talking about a long time. Less NAS, more corn. All right? Less S&P, more gasoline. Okay? We're going to stick with those macro themes. And copper too. I don't want to ignore copper in any way. You know, let's focus on some of these markets. Yeah, they've been a little rocky, but these are the ones that are more likely to move higher. Less gold, more copper. So what you trade is more important than how you trade it. Get that focus, get that watch list right. And I think you're going to see that April is going to continue to be a great month. All right, gang, have a great one. And if you haven't already signed up for the Countdown Trader, it's my free newsletter where I'm talking about these topics quite consistently. So if you're not in one of the paid rooms with me, don't worry about it. You can start off with getting a feel for what I do over at countdowntrader.com. Have a terrific weekend. I'll see you next week.
Without simpler trading, I could not have financial independence.
This is one of the best investments that I ever made in my life.
It's helping me find consistency.
It's one of the things that won me